In general, letter of credit can be defined as documentary credit, or a letter of credit is a conditional bank undertaking of payment. It is a written undertaking by a issuing bank giving to the seller, which is beneficiary bank, at the request and on the instruction of the buyer, which is applicant, to pay at sight or determinable future date up to a stated sum of money within the prescribed time limit and against stipulated document. Letter of credit under Islamic Sharia means that a written agreement is given by an Islamic bank to the seller, which is beneficiary bank, upon request, and the instruction of the buyer, which is applicant, to pay at fixed or future date. The specific amount of money within the stipulated time limit and against the prescribed document that must be compliant with the term and condition. Islamic prohibition must offer ILC, which is Islamic Letter of Credit, under certain Sharia contracts.
Islamic bank may issue the letter of credit under three concepts of contract, where they are al-wakalah, al-musyarakah, and al-murabahah. In Malaysia, only the concept of letter credit al-wakalah and al-murabahah are widely used, whereas letter credit al-musyarakah is not used and practiced in commercial banks. The reason is why al-musyarakah is not used is related to the domestic banking policies issues, in which the commercial banks that principal does not cooperate in the business ventures and therefore not responsible for the loss of goods. Letter credit al-musyarakah, however, are widely practiced by the Middle Eastern countries. Firstly, the concept of contract involved is al-wakalah. Contract al-wakalah can be known as agency. Islamic letter of credit based on the concept of al-wakalah means that the banks will act as the agents on the behalf of the customers by issuing the letter of credits to the third parties to pay the amount stipulated in the agreements, and when the third parties meets the requirements and conditions stated in the letter of credits at determinable future date as promised. The main elements under al-wakalah Islamic letter of credit is, firstly, the contract is based on the agency. Second, the commission is charged. Third, reimbursement instructions by notifications. And lastly, only halal goods can be transacted. The modus operandi Islamic letter of credit under al-wakalah. In letter credit al-wakalah, the customer, which is al-muwakil, may ask the bank to issue the letter of credit with written instructions, and upon the approval, the banks may require the customer to place a deposit of full price, which is 100% of the goods, to the bank, which is known as al-wakil. The bank accept the deposit placed under mortgage, in which the principles of al-wadi'ah ya damanah is applied. The bank then set up letter credit in favor of exporter and took the commissions and other charge. After negotiating the document, the issuance bank will pay the consultation bank by using the customer's deposits. After that, the bank charge a fee for its services based on the principles of al-ujrah, which is known as fee, and in turn release the documents to the customer. With reference to the situations in letter credit al-wakalah, agency relation exists between bank and customers, where bank act as agent to the customer, which is the importers. Delegations of agency is where the customers or applicant submit a written directive to the banks by completing a standard form showing the details of the trade. The banks or agent will act the written order or the request of customer to issue the letter of credit. This written directive act as a accord, which is offer and acceptance that binds both parties to a binding agreement. From this point onwards, the banks or agent will ensure that the letter of credit reach the exporters. The banks then promise to check the necessity of documents as required by UCP and makes the payments accordingly. Acting as agents, the issuance bank only provide payments guarantee to the exporters. The bank are only agents from making payments for the importers. The goods are in fact paid in full by applicant from the deposit placed in the banks. As an agent, the bank receive the right to receive the commission and in addition to the service charge incurred upon the issuance of the letter credit. Currently, letter credit al-wakalah are widely practiced by all full-fledged Islamic banks in Malaysia.
Next, modus operandi al-murabahah. In al-murabahah, modus operandi have 4 parties. One is customer, exporter, Islamic bank, and beneficiary bank. Customer is people that won't buy a car, which is goods they export from other country. The exporter is a party that export the goods to sell in this country. For example, the customer wants to buy a car which is made from Honda company in Japan. So an Islamic bank is a bank customer use letter of credit and place to pay the monthly payment for the car, while the beneficiary bank is a bank that exporter gets their money from the outcome they sell the car to the customer. Okay, for the flow al-murabahah, for the first step, the customer wants to buy the goods from the exporter. So the customer will send a promise to purchase the goods to the end Islamic bank. This means the customer will send one document which contains an agreement that the customer wish to purchase the goods to the Islamic bank. Step number 2A, Islamic bank will forward the specification for the goods to be exported to the exporter. Islamic bank will send the document that customer give the promise to purchase the goods to the exporter, which means if the customer wants to buy a car from the exporter, which is Honda company, so an Islamic bank will send the promise to purchase the goods to the Honda company in Japan. Islamic bank wants to make a confirmation with Honda company that the customer wants to buy the car from them. Step number 2B, the exporter will send a quotation to the Islamic bank. The quotation contain the price of the car that the Honda company give to the customer. Next step, when Islamic bank read the quotation and then they agree with the price that Honda company willing to sell, Islamic bank will establish letter of credit on its behalf with the beneficiary bank. This step means the Islamic bank start to make the letter of credit with the beneficiary bank on behalf of their customer. In the step 4A, the exporter will forward the shipping document to the beneficiary bank. The shipping document contains what goods they export, how much the shipping costs, when the goods will be received, and other important information. Then the function of the beneficiary bank, in this step, they will forward the shipping document that they receive from the exporter to the Islamic bank. The beneficiary bank send the shipping document to the Islamic bank to let Islamic bank know what's content the shipping document. Okay, when it's done, this 4C step, the exporter will deliver the goods to the Islamic bank. This means the Honda company will send the car from their company to the Islamic bank. Okay, the next for step 5A, an Islamic bank will make a payment of the letter of credit amount to the beneficiary bank. In this situation, an Islamic bank will be the owner of the car because they use their own money to pay the letter of credit. When it's confirmed, the Islamic bank makes the payment of letter for the letter of credit to the beneficiary bank. The beneficiary bank will pay the amount which is received from the Islamic bank to the exporter. This means the beneficiary bank is an intermediary between the Islamic bank and the exporter. Okay, for next step, which is step 6A, As we know, Islamic bank already buy and receive the goods from the exporter, which is the car from Honda company. Islamic bank will sell the goods on Al-Murabaha to the customer. This means the Islamic bank sell the car to the customer that willing to buy car that made from Honda company. The last step, which is 6B, is the customer pays the Al-Murabaha sale price to the Islamic bank. This step means the customer will make the payment for the goods that they willing to buy. Basically, the customer will make a monthly payment to the Islamic bank.
Next, we move under Musyarakah concept. Musyarakah is a contract between the bank and applicant where the letter of credit value is issued by the bank and the profit of transaction is shared between the bank and applicant as a promise. The term of contract is depend on the negotiation and the discussion between these two parties. The better relationship, the better the term that can be obtained from the bank. Modus operandi under musyarakah. Firstly, the customer informs the Islamic bank of his Islamic letter of credit requirement and negotiates the musyarakah financing for his requirement. Secondly, the customer places with Islamic bank a deposit the cost of goods or import as musyarakah agreement which Islamic bank accept under wada'ah yad damanah. Thirdly, the Islamic bank will establish the Islamic letter of credits and pays the proceeds to the negotiating bank utilizing the customer deposit as well as it wants a share of financing. Next, the Islamic banks release the document to the customers. Then the customers takes possession of the goods and dispose them in the manner agreed. Lastly, the Islamic bank and the customers share deposit from the venture as provided for in the agreement.
Assalamualaikum. My name is Muhammad Shukri bin Muhammad Razi. Today I will present about trust receipt. Trust receipt is one of the trade financing. Trade was recognized to be an important tool in the economic activities. It was creating many jobs and demand for trade financing, including for import and export purpose. Okay, now we will go through about the definition between trust receipt and Islamic trust receipt. For trust receipt, this mechanism is a written legal document between a bank and a person borrowing from that bank. On the document shared that the bank will give merchandise to the borrower, but the bank will still retain the title to the merchandise and can repossess. It is if the buyer does not uphold the term decided upon the trust receipt. At the same time, borrower must keep the merchandise and any profit made from the merchandise separate from normal business expenses, and the bank repossess the item. The borrower will return the item or the money made from the selling of the merchandise. In daily transaction, items used in trust receipt are large items with social number that are easy to record and keep track of. For instance, radios, refrigerator, television, large appliance, and tray can be all given to borrow by the signing a trust receipt. Then the borrower promised to pay the loaner back an amount of money worth the property loaned to him. Concept of trust receipt can be said as similar to a loan where the borrower provides a type of collateral to the bank or the other business loaning him the money. However, this type of loan is considered a secure loan because an item, not as a collateral, is listed as part of the arrangement. In case the borrower does not repay the loan, the lender has the right to take the collateral item and sell it to cover the money the borrower owed him. But the difference between the trust receipt and the standard loan is that in a trust receipt, the item being borrowed and any money made from selling them also serve as a collateral from the loan. Okay, now we will discuss based on Islamic perspective, which is Islamic trust receipt. Islamic trust receipt is issued by Islamic bank to the customer based on the concept of murabaha for financing the purchase of goods. Murabaha trust receipt. Murabaha trust receipt is a document signed by customer, which is the purchaser or the importer, on the strength of which the bank release the shipping document to the purchaser or the importer who undertakes to lend, store, insure, hold and deliver to his buyer the said merchandise and receive the process of the sale as trustee from the bank. The bank does retain the legal title of the shipping or the transport document or the merchandise, but physical possessions of goods to the purchaser or the importer who act as agent of the bank. Dispose them profitable will be for profit and pay the bank the agreed selling price on before due date. For example, a customer who is involved in trading and manufacturing may require to purchase a merchandise or the raw material in the course of his business. In this case, the customer will require the murabaha trade receipt together with financing facilities over a certain period of time. The bank will offer the customer with murabaha trade receipt facilities. The bank, having made payment to the negotiate bank, will then sell the merchandise to the purchaser or the importer at the sale price comprising its cost and profit margin under principle of murabaha, where the settlement will be on deferred term. The bank secured the transaction against the merchandise securities as deemed necessary. To enjoy such arrangement, the purchaser or the importer would have applied and been granted a murabaha trade receipt. Under normal circumstances, the facility is approved only to the customer enjoy murabaha trade receipt facility. In the event that the customer settles the murabaha trade receipt facility prior to its settlement date, the customer will be entitled to the rebate. Okay, now let's go through with the main features of murabaha trade receipt, or we call it Islamic trade receipt, and the trust receipt based on the conventional. Okay, the first is murabaha trust receipt is concept that they use is based on the buy and selling, but for the conventional trust receipt, they will use concept of lending and borrowing. Okay, for Islamic trust receipt, there will be a profit or markup created. For the conventional trust receipt, the interest is created and accrued. For the Islamic trust receipt, selling price will be contracted in the contract, but for the trust receipt for conventional, there is no selling price. For Islamic trust receipt, ibrah, or we call it a rebate, is given for those have early settled their loan. But for the conventional trust receipt, the interest will be charged until the repayment of the contract is settled. For the Islamic trust receipt, only halal good may be transacted. All the haram things is prohibited in the murabaha trust receipt. For the conventional trust receipt, there is no restriction even there is the good is halal or haram.
Next is the differences between the conventional trust receipt and murabaha trust receipt. The first differences is on the owner of the goods. In conventional, the bank is still the owner of the good and the customer sells the good on behalf of the bank. While in murabaha trust receipt, the Islamic bank will sell the good to the customer, means that the customer is now the owner of the goods. The second differences is the charge to those who fails to pay. Under the conventional trust receipt, the bank will charge the additional interest on the loan given to those who fails to pay to the bank on a maturity date. The Islamic bank, on the other hand, will only charge gharama, which is penalty,
to the customer, which is calculated based on the actual cost incurred by the bank when the customer default in paying the financing. And the last one is the differences on the level of understanding. In conventional, the nature of the trust receipt itself is very confusing because the good belong to the bank and at the same time, it holds the hypothecation over the good. While in Murabaha trust receipt, it is very simple, straightforward and easy to be understood. Next, we move to the process of the Murabaha trust receipt. At first, the customer must have and approve the Islamic trust receipt line. The request for the financing must include the submission of the relevant documentary evidence of the underlying transaction and compliance to the term of the facility. The customer need to inform the Islamic bank of their purchase requirement and request the bank to purchase the good. And then the Islamic bank will appoint the customer as its agent to purchase the good on behalf of the Islamic bank. And then the second one is the supplier will export the good to the customer as per agreed. The third one is upon the delivery of the goods, the Islamic bank will pay for the cost of the goods to the exporter based on the invoice value. Fourth, the Islamic bank will resell the good to the customer on deferred payment term at a price inclusive the Islamic bank profit margin. The deferred payment term granted to the customer constitute a creation of debt. This is securitized in the form of the bill of exchange drawn by the Islamic bank and accepted by the customer and payable on maturity. And then the Islamic bank holds the customer's Islamic trust receipt executed by the customer. This is to signify that the customer holding of the goods in the trust pending the final sales of the goods. The last one is number 5, where the customer undertake to settle the selling price on a expiry date.
In conclusion, Islamic letter of credit is a comprehensive product, especially for the use of Muslim in international trade. A few actions could be done as improving operation Islamic letter of credit, such as specific standard Islamic letter of credit that does not meet with conventional letter of credit that call uniform, custom and practice. So, this action is benefiting between the exporter, importers and the banks.
As we can conclude for Murabaha trust receipt, Murabaha trust receipt is also one of the Islamic trade financing. It brings a bright future for the local and international trade financing. By the Murabaha trust receipt, it helps the effectiveness of business activity around the world. At the same time, it will improve and strengthen the Islamic economy of Malaysia globally.